Sir, very happy morning to all. Sir, we have completed the brilliant chapter called as Assessment of Partnership Firm LLP. In that we will try the past examination ICA question, which can be a 10-mark area for examination. My dear lovable students, sometimes a 15-mark question will be coming from company, that is question number 1, and a separate partnership 10-mark question will be coming. So 25 mark. The same, instead of company, they will use the word partnership. That's it. If you are thorough in basics of tax, that is PGBP, capital gain and IFRS, this 25 mark will be in your pocket. Net profit as per P&L of rupees 200 lakh of Simran Enterprises having a partnership firm status engaged in running hotel business for year ended 31/3/2024 arrived at after charge of the following. That means net profit as per P&L account is 200 lakh. This items has been debited to P&L account, right man. So net profit as per P&L account is 200 lakhs, fine. This has been debited to P&L. Depreciation on the hotel building having WDV on 1/4/2023, 600 lakhs was charged to treating as same as plant and machinery. What is the depreciation for building? 10%. What is the depreciation for plant and machinery? 15%. So they have claimed extra 5% depreciation. We know that how to deal with that. Excess depreciation on building, that 5% on 600 lakh. Hotel building does not constitute plant and machinery. Therefore, depreciation chargeable thereon at 10%. However, depreciation has been charged in the P&L account at the rate applicable to plant and machinery at 15%. Accordingly, excess depreciation charged in the P&L account at 5%, that is 15% minus 10%, has to be added back. So, total of 600 lakhs into 5%, 30 lakhs excess depreciation should be added back. Super sir. Expenditure of 2 lakh incurred for the purpose of promoting family planning among employees. Sir, expenditure incurred by family planning among employees is allowed as deduction only for company and not for any other assessee. So this 2 lakh has been debited to P&L account. So expenditure on promoting family planning among the employees, expenditure on promoting family planning among employees allowable under 36 subsection 1 clause 9 only to a company assessee. Since the assessee is a firm, such expense are not allowable and therefore same has to be added back 2 lakh. Super sir. Without knowing PGBP, capital gain, IFRS, that is a base. You cannot touch the direct tax paper. Payment of 1 lakh for an advertisement published in souvenir released on 26 January by political party approved by election commission. As per section 37 subsection 2b, this amount has to be added back and it can be claimed as a chapter 6 reduction under 80 GGB or 80 GGC as the case may be. Advertisement in souvenir of political party. Advertisement of any nature given in magazine or souvenir published by political party is not allowable as per 37 subsection 2b. However, the same is allowed under 80 GGC. So hence 1 lakh I am adding back. Next adjustment. Compensation of 2 lakh paid to supplier of automatic kitchen appliances because of termination of the contract. That will be treated as a business expenditure. Nothing we have to do. Compensation paid to supplier of kitchen appliances. Compensation paid for breach of contract for supply of capital asset in the nature of revenue expenditure. The same is paid for breach of contract. It can be treated as a business expenditure. Wine and liquor imported in the year 21-22 for 30 lakh and were available in stock on 1/4/2023 of having value of 10 lakh were confiscated by the government authority and thus written off. That means you have imported wine and liquor and that has been confiscated by the government. That means you have done something against the government and that amount has been written off. That 10 lakh rupees has been written off, my dear lovable students. Loss of stock in trade as considered as a trading loss. It is not a capital loss, it's a revenue loss because stock will come on the credit side of the P&L account. Explanation to section 37 subsection 1 is not relevant here since it is not a business expense. It is not a case of business expenditure but one of the business loss. The business loss is allowable on ordinary commercial principle as per Dr. T.A. Qureshi case law. Therefore, since wine and liquor form part of stock in trade of the firm, confiscation of the same has to be allowed as business loss. Since the same has been charged to P&L account, no further adjustment is required. Next one. So this is a trading loss, so it can be debited to P&L. Expense of 30 lakh, my dear lovable students, incurred on the replacement of carpet in lounge, dining hall and reception desk area. These all are revenue expenditure. Because of incurring this expenditure, you are not going to earn any new income. So expenditure incurred in replacement of carpet by hotel is an expenditure incurred for the purpose of business, and hence revenue expenditure allowable as deduction under 37 subsection 1. Since the same has already been debited to P&L account, no further adjustment is required. This is actually not illustration number 2. This is additional information. The firm has also provided the following additional information and the details relating to the expense charged in the P&L account. The amount of 2.8 lakhs equal to $8,000 was remitted and paid to a travel agent of USA as commission for booking of travelers from USA. Tax source was not deducted out of such payment. So we made a payment of 2.8 lakhs $8,000 for booking for a travel agent to book travelers from USA. So you have to check whether the income is accrued or arisen in India. That's what we have to check, my dear lovable students. So totally, sir, 2.8 lakhs you have paid. The amount of 2.8 lakhs. So 2,80,000, sir, disallowed because the assessee is a non-resident because you have not deducted the TDS. Sir, amount of 2,80,000 equal to $8,000 was remitted and paid to a travel agent of USA as commission for booking the travelers from USA. Tax source was not deducted out of such payment. Sir, from USA you are booking the ticket to come, maybe to come to the India or the clients of Indian clients. So that income is accrued or arisen from India. For that, TDS has to be deducted. No TDS has been deducted. 100% disallowance under 40A subsection 1. Amount of 30,000 each was paid in cash to 4 suppliers of vegetable and milk product on 11/7/2023. Right. Due to suspension of banking operation because of India's strike of bank employees, because of bank strike, we have paid, sir, 30,000 each to 4 employees, my dear lovable students, disallowance under 40A subsection 3. Now that is not an excuse. The cash payment totaling 1,20,000 made on the day when bank employees were on strike is not an exception covered under Rule 6DD. Therefore, disallowance under 40A subsection 3 is attracted. 1,20,000 should be added back. Amount of 6 lakh was written off in financial year 21-22 as bad debt. However, with constant follow-up and effort, as an amount of 3 lakh got recovered on 18/3/2024, which is bad debt recovered, which is 41 subsection 4. Out of total written off, which was credited to bad debt reserve account, it should be credited to P&L account and deemed income, my dear lovable students. So add recovery of bad debt credited in the reserve but chargeable under 41 subsection 4, 3 lakh. So we have to adjust that. A recovery of a debt which was earlier written off and allowed as deduction under 36 subsection 1 clause 7 is chargeable to tax under 41 subsection 4 in the year of such a recovery. Accordingly, such amount has to be added to income despite the fact that same was credited by firm in a reserve account. So that 3 lakh should be added to the net profit. The gross total income you will get from that 80 GGC, that is advertisement in a souvenir of political party, you can reduce. So you will get the total income of partnership firm, my dear lovable students. Compute the total income of the firm and also give reasons in brief for treatment given to each item. This is not my question. This is a past examination question for 14 mark in exam, or I think 10 mark in exam, because this is a full-fledged, sir, PGBP question. You just think what's new you have learned in this. Once you are thorough with PGBP, capital gain and IFOS, sir, a 10 mark will be in your pocket. Sometimes in examination, a 15 mark big question they are asking as first question. And another supplement question will be asking for 10 mark from assessment of partnership firm. In that in between, they will just insert the 40B additions, nothing more, nothing less. I'm moving into a big question, fantastic question, which is there in the ICA study material, my dear lovable students. This is a past examination question for 15 mark, the first opening question. Mrs. HIG firm consists of 3 partners, namely HIG. Carried out the business of purchase and sale of television sets in wholesale and manufacture of sale of pen under a deed of partnership executed on 1/4/2013. HIG were partners in their individual capacity. There is no representative capacity here. All are partners in their individual capacity. So they are throwing lights to explanation 1 and 2. Deed of partnership provided for payment of salary amounting to 1,25,000 each to H and G, who were working partner. A new deed of partnership was executed on 1/10/2023, which apart from providing for payment of salary to the 2 working partner as mentioned in the deed of partnership executed on 1/4/2023, for the first time provide for payment of simple interest at the rate of 12% per annum on the balance standing to the credit of the capital account of the partners from 1/4/2023. That is not allowed because we can't make anything retrospectively, but we can make prospectively. The firm was dissolved on 30/1/2024. Oh my God. And the capital asset of the firm were distributed among the partners on 24/2024. The net profit of the firm for the year ended 31/3/2024 after payment of salary to the working partner and debit or credit of the following item to the P&L account was 1,50,000. So this is the net profit as per P&L account after debit or crediting. Interest amounting to 1 lakh paid to partner on the balance standing to the credit of capital account from 1/4/2023 to 31/3/2024 till the date of entering into partnership. That interest should be added back, but from the date of entering into partnership till year end, interest will be allowed as deduction. Interest amounting to 50,000 paid to partner on the balance standing to the credit of their current account from 1/4/2023 to 31/3/2024. They said that the interest will be paid on the capital balance, and so there are 2 ways or 2 systems in which capital balance can be followed, either fixed capital method or fluctuating capital method. Here they are following the fluctuating capital method. So interest has been provided even on current account also. Interest amounting to 20,000 paid to HUF of partner H at 18% per annum. For the HUF, they have paid the interest. That is not within the limit of 40B. Payment of 25,000 for purchase of television set. Stock in trade made by crossed check should be added back because it should be account paid check. This is as per 40A subsection 3. Rupees 30,000 being value of gold jewelry received as gift from manufacturer for achieving sales target as per 28 clause 4. Any gift you are receiving on account of business or profession should be taxable under the head PGBP, and for that TDS has to be deducted under section 194R per requisite if the amount exceeds 20,000. Depreciation amounting to 15,000 on motor car bought and used exclusively for business use but registered in the name of partner H, no problem. Partner and the partnership firm will not be treated separately. Even if the asset is registered in the name of partner, partnership firm can claim depreciation. Depreciation under 32 subsection 1 class 2 is 37,500 of new machinery bought and installed for manufacture of pen on 1/11/2023 at a cost of 5 lakh. For this, you are entitled to claim additional depreciation, but since it is less than 180 days, you are entitled to claim only 50% of additional depreciation. Interest amounting to 25,000 received from a bank on FD made out of surplus fund. This interest has been credited to P&L account. This should be taxable under IFRS. Remove it untaxable. The firm furnishes the following information relating to it. Closing stock was valued at 60,000 as per the method of lower of cost or NRV consistently followed by it. The net realizable value of closing stock was 65,000. So closing stock was valued at cost or NRV, whichever is lower. But this partnership firm has dissolved. We all know that once the firm has dissolved, we have to prepare the balance sheet on NRV basis. Brought forward business loss relating to assessment year 23-24 was 50,000. Fair market value of capital asset on 24/2024 was 20 lakh, and the cost of their acquisition was 15 lakh. So capital gain will come, which is basically 45 subsection 4, distribution of capital asset by a partnership firm to the partner at the time of dissolution. Compute the total income of Mrs. HIG for assessment year 24-25 You are required to furnish explanation for treatment of various items given above. This is a 15-mark question in examination, my dear lovable students. Sir, here you can feel the relevance of what we have done for PGBP, capital gain and IFOS. Without that knowledge, you cannot touch this question. Computation of total income of Mrs. HIG for assessment year 24-25. Income from PGBP, net profit as per P&L 1,50,000. Add items debited to P&L but not allowable as deduction. Interest to partner on capital account for period from 1/4/2023 to 39/2023 disallowed. Total interest of 1 lakh but deduction limited to 6 months only because 50% thereof is deductible and balance is added. Because for the first 6 months there is no partnership deed. After entering into partnership deed, they made a retrospective amendment, my dear. That retrospective is not allowed, but from prospective is allowed. So out of 1 lakh, 50,000 is allowed, 50,000 should be added back. Interest to partners on current account from 1/4/2023 to 31/2024 not authorized by the deed, hence disallowed. Because the deed is saying that interest on capital on the fixed capital is allowed. They have not specifically mentioned anything about the current account. So that current account amount should be the partnership deed of 1/10/2023 provides for payment of interest on balance in the capital account of partners only. Capital account means capital account. As such, interest paid on balance standing to the credit of current account of the partners is not allowable under 40B. The Kerala High Court as a novel distributor enterprises on identical facts held that interest paid to partner on their current account balance is not allowable. If you want to claim it as a deduction, you have to mention in the partnership deed specifically that current account interest on 100% of 25,000 paid towards purchase of television set, otherwise than by account pay check drawn on a bank or account pay bank draft or use of electronic clearing system through a bank account or through such other electronic mode as may prescribe, sir, should be added back, my dear lovable students. Difference on account of valuation of closing stock in trade at NRV because you are going to, sir, dissolve the firm. So we have to read the note number 9. You are going to dissolve the firm as per para 24 of ICDS 2. Valuation of inventory. Closing stock has to be valued at NRV in case of dissolved firm. Are you going to dissolve? Then why are you showing a cost? Put it on dustbin. As per ICDS 2, you should value at NRV. At such a closing state of firm has to be valued at NRV 65,000. Since it had been valued at 60,000, the balance 5,000 should be added back because closing stock increase achana net profit increase out. Salary paid to working partner considered separately, hence it should be added back because 40B provisions will be applicable, less allowable expenditure. Additional depreciation on new machinery. Sir, that new machinery is entitled for additional depreciation, but since you have put to use for only less than 180 days, you are entitled for half the rate of depreciation. Additional depreciation 5 lakh into 20%, 1 lakh, that is 50,000. Interest received from the bank on fixed deposit considered separately, sir, 25,000. Interest received because this has to be taxed under NOS, IFOS. So now you will be getting the book profit. On that book profit, I am calculating the salary to the working partner. The totally, sir, they are having 3,63,000 because 4,55,000 4,55,000 has to be classified into two categories. On the first 3 lakh and balance 1,55,000. On first 3 lakh, we know that 2,70,000. And 1,55,000 into 60% comes to 93,000. So put together 2,70,000 plus 93,000 means 2,70,000 plus 93,000 comes to 3,63,000 is what the maximum allowable remuneration. Or you should not do mistake here. The amount what you have add back is only 2,50,000. So the partnership deed is authorizing only 2,50,000. Income Tax Act or partnership deed, whichever is lower. So the deduction allowable is 2,50,000. That's it, my dear lovable students. And business loss relating to assessment year you can set off. You will get the income from business of 1,55,000 and IFOS is 25,000. We have reduced it from the PGBP. It has to be taxed under IFOS, my dear lovable students. This question you can solve very easily and you are entitled to get a 15 mark in examination. For that, the only thing required is you should have a strong base in PGBP, capital gain and IFOS. If that is the case, you are a king in that. 25 mark, because 15 mark you can expect a full-fledged total income question, plus a substitute question are also coming for 8 to 10 mark computation of total income. So if you are having the grit, then you are a hero. Vijay Agency, a partnership firm constituted by 3 partners with equal share, was dissolved on 1/3/2023 after a search. The tax liability of the firm outstanding to be paid determined is 15 lakh. Out of 3 partners, sir, one was declared insolvent on 18/3/2024 by the court. Able for recovering the demand, attached the bank account of other 2 partners and could recover an amount of 6 lakh from account of one such partner. You are asked by partners of the dissolved firm the following question about the liability of each of them to pay outstanding demand. All are jointly and severally liable because this is partnership firm. Whether action of able to attach bank account of the partner to recover the tax demand of dissolved firm is justified? Yes. As for 189 subsection 3, every person who was at the time of dissolution a partner of the firm shall be jointly and severally liable. We already discussed for the amount of tax penalty or other sum payable, and all provisions of the act relating to assessment of such tax or imposition of such penalty or other sum shall apply. Therefore, all the 3 partners till one was declared as insolvent by the court are jointly and severally liable for making the outstanding dues of 15 lakh. After insolvency of one partner, the other 2 partners are jointly and severally liable to pay such demand. Since one person is insolvent, leaving others are jointly and severally liable. Accordingly, the action of AO to attach the bank account of partner for recovery of outstanding demand is correct. An amount of 6 lakh, the recovery by attachment of bank account of one of the partners is also in order, because as per section 189, if a partnership firm has been dissolved at the time of dissolution, my dear lovable students, whoever may be the partner are jointly and severally liable is what our discussion is all about. Fantastic to the core. Moving into illustration number 4. Victory Polyfibers, a partnership firm, has earned a gross total income of 300 lakh for the year ended 31/3/2024. Firm has not undertaken any international transaction or specified domestic transaction during the said year. That means TP provisions will not be applicable. Above includes a profit of 220 lakh from an undertaking having a turnover of 80 crores. This is the 5th year and deduction under 80IA of the Income Tax Act is available to the extent of 200 lakh. There are some grey areas in taxation working, and Classes is contemplating to file the return of income on 7/12/2024 after seeking clarification from the tax experts. Oh my God. Advised assessee firm by working out the income tax and tax payable where the return is filed on 31/10/2024 or when the same is filed on 7/12/2024. What they are indirectly asking, what is a practical solution as regards obtaining clarification which might or might not have an impact on total income? You may ignore interest under 234 ABC and 234F while making the computation in support of your advice. They are testing only one section. We have already discussed in the class silent killer under section 80 AC. If you want to claim deduction under 80 IA to 80 RRB, that is under the chapter 6A under the heading C, you have to file the return of income on time. If you are not filing the return of income on time, then you are not entitled to claim that. As per section 80 AC, while computing the total income of assessee of previous year, in this case relevant to any assessment year, in this case any deduction is admissible inter alia under 80 IA. Such deduction shall not be allowed unless it furnish a return of income for such assessment year on or before the due date specified under 139 subsection 1. Since the turnover of partnership firm has exceeded the prescribed threshold limit in the previous year 24-25, it would be subject to audit under 44 AB, in which case the due date of filing the return for assessment year 24-25 would be 31st of October as per section 139 subsection 1. Every section we have discussed. Computation of total income and tax liability of Mrs. Victory Polyfibers, where the firm files its return of income on 31st of October, gross total income 300 lakhs. Less deduction under 80 IA, they themselves given in the question 200 lakhs. So the total income is 100 lakh. 100 lakhs tax liability 30%, and health and education says 4%. Regular income tax payable is 31.20. We know that if an assessee has claimed three deduction, that is deduction under 10 AA, 80 IA to 80 RRB except ATP, and 35 AD as reduced by depreciation under section 32, we are supposed to compute the AMT. Right, fantastic. So total income is 100 lakhs. Add deduction under 80IA, 200 lakhs. Adjusted total income is 300 lakhs. On this, 18.5% is the AMT. So 300 lakhs into 18.5% comes to 55.5 lakhs is the AMT. Add surcharge at 12%. Since the adjusted total income as exceeds 100 crores, we all know that partnership formula 12%. So on this amount 12%, subtotal is this. Health and education is at 4%, you will get the AMT payable. Since the regular income tax payable by the firm is less than the AMT, we know that adjusted total income shall be deemed to be the total income of the firm for previous year 23-24, and it shall be liable to pay income tax on such income at the rate of 18.5%. Section 115 JC subsection 1. Therefore, tax payable for assessment year 24-25 will be 64.65 lakh, and the difference between the AMT payable and the normal route payable can be carried forward as AMT credit for 15 assessment year. Whatever we have talked in math will be mutatis mutandis applicable. So tax credit for AMT, total tax payable is this much, less regular tax payable. This can be carried forward for 15 assessment year. Now, the firm is not filing the return on time. If the firm is filing the return beyond due date, then 80AC is saying that you are not entitled to claim 80IA deduction. Where the firm files its return of income on 7th December, where the firm files its return on 7/12, it would be a belated return under 139 subsection 4. Yes, sir. Consequently, as per 80AC, that is silent killer, deduction under 80IA would not be available. In such circumstance, the gross total income of 300 lakh would be the total income of the firm. So 300 lakhs into 30%, and since the total income exceeds 1 crore, surcharge at 12% will be applicable. Health and education says at 4%. Total tax liability will be this much. That's it, my dear lovable students. What is a practical solution regarding the obtaining clarification? Yes, sir, நான் லேட்டா return file பண்ணேன் because எனக்கு இந்த வருஷத்துக்கு deduction கிடைக்குமா இல்லையான்னு தெரியல. So what is the practical solution? If the firm files a return of income under 139(1) on or before 31/1/2024, its tax liability would stand reduced to only this much lakhs. As this much lakhs. நீங்க டிலேயா ஃபைல் பண்ணீங்கன்னா 80AC சைலண்ட் கில்லர் என்ன சொல்லுதுன்னா 80IA to 80RRB உங்களால கிளைம் பண்ண முடியாது. அப்போ டைமுக்கு ரிட்டர்ன் ஃபைல் பண்ணா அது கிளைம் பண்ணிக்கலாம். So lakhs to be paid if return is furnished after the due date. Further, it would also be eligible for tax credit for AMT under 115 JD to the extent of 33.45 lakhs. Therefore, the firm is advised to file its return of income on or before 31/10/2024. The practical solution regarding obtaining clarification would be file the return of income under 139(1) on or before the due date. நம்ம என்ன பண்ணோம்னா டிடக்ஷன் எடுத்து ரிட்டர்ன் ஃபைல் பண்ண வேண்டியதுதான் and claim deduction under 80IA. In such a case, firm can claim deduction of 200 lakhs under 80IA. Thereafter, consequent to the clarification obtained, if any change is required, it can file a revised return under 139 subsection 5 by 31/12/2024. By the time when you get the clarification, you came to know that this deduction you are not entitled to claim, revise the return and pay the tax, which would automatically replace the original return filed under 139(1). A revised return filed under 139(5) would replace the original return under 139 subsection 1. My dear lovable students, this is like a combination of PGBP, capital gain, IFOS and assessment procedure. Everything they are testing with the first 15 mark question. If you are learning selectively here and there, you can't answer this type of question. A clear and a structured way of learning is required to answer all this, my dear lovable students. With this, all the practical questions of assessment of partnership firm comes to an end. Whatever we have discussed in the partnership firm are mutatis mutandis applicable to LLP also. Sir, in that the same, we are having practice question of illustration number 1 and practice question of illustration number 2 and practice question of illustration number 3. You can try the practice question, nothing more, nothing less in that. Whatever we have discussed, I have given as consolidated. After you try by your own, if you are having any doubts, you can listen to the lecture if you need to clarify that doubts. With this, we can say that we are through with assessment of partnership firm and LLP comes to an end. Enjoy and study very well, my dear lover.